Good morning, trading world. It is December 2nd, 2021, just after 8 a.m., and this is my pre-market outlook. Today's title, Don't Believe the Hype or the Bounce. Kind of a play off the old Public Enemy. Now, when I say don't believe the hype, there's a lot of stuff on the news that all of this is over concerns of the new variant, the new COVID variant. And they want to place all the blame on the COVID variant. That's the reason that the market is going crazy. There may be some logic as to, yes, the new variant may have been a spark, but it's not the complete and, for that matter, majority reason that the market is going through this spasm right now. It has more so to do with monetary policy and inflation more than anything else. There's the Fed had been saying that this was transient or temporary, and from the beginning, or at least close to the beginning, they've known that this was not temporary. Once you start hiking up wages to get people to work, wage inflation is not temporary. There's no coming back from that. You can't walk onto a job and say, okay, we're paying you $25 an hour because that's what the market says now, and then all of a sudden go back to the same person that's been working and say the market is cooled off now, so we need to take you back down to $15 an hour. That's not going to work. But not going to get off into that deep hole and get sidetracked by that. Yesterday I did an evening video as a further warning about what's to come. I did an analogy comparing the market condition to that of a roller coaster. So we all know going up the roller coaster, that first climb up, that slow methodical climb up, that's pretty much the uptrend that we've been on, although I won't say slow when it comes to the uptrend. But what happens after you go uphill and you take that first drop, from that point on, the climb up or the uphill portions of the roller coaster are just as crazy as the down portions of the roller coaster. So that's kind of what you have to look forward to in the market. And when I say that, we're going to see our first dead cat bounce coming soon. I look for kind of a fail rally today where we kind of turn over, and we tried a couple times, but it doesn't quite happen. And then maybe going into Friday or at some point next week, we get a taste of one of those crazy rallies where we just get on a tear and go straight up for a bit. But it's neither here nor there today because it's not happening today. I don't believe that it's going to be able to get completely started today. What we're looking at, I have up a 1-year daily chart, And on the 1 year daily chart, this is the 1, 2, 3 criteria for the intermediate trend. This is for the 90-day 4-hour trend. As we can see on the 90-day 4-hour trend, the intermediate trend, we have done everything on the 1, 2, 3 criteria to prove that trend has changed on the intermediate time frame. So we have the failure to the break of the trend line, and then failure to make higher highs from that point. We have the intermediate trend test and failure right here, where we tried to come back up and there was a wall built here and we couldn't get through it. And this was the established low from the first minor sell-off. And we see here we've broken that low. So on the intermediate trend, it has definitely changed to a downtrend. Now, we look to establish a low for the daily somewhere, wherever we stop, whatever the low is today or tomorrow. We look to establish, even coming into Monday, this could take several days, but we look to see what that established low is, and then we're going to get a bounce, and that bounce is going to take us back up here somewhere. So that's on the daily. But what I want to take the time to take a look at is we're at a very important level on the weekly chart as well. This is a 3-year weekly, and this is the trend that we have going on the weekly. And as you can see, we're at a place where we're about, or it's possible to break the weekly trend and even longer term trend. And once that is done, once we complete the 1, 2, 3 cycle for the weekly trend, it's not just about coming back and retesting here. It's going much lower. You would think that this would be somewhere in here, would be a level to think about retesting, but it's not about just that level. It brings all of this back into play on this trend. So that's what I wanted to kind of show you to keep your eyes on. So let's look at we'll talk about trade for today. For intraday trade, we're below the profile, which is usually a bullish sign. However, it is clear that the selling is nowhere near done for the week. So watch for a struggle to bounce and turn over, pushing even lower. Levels will be looked at differently, because with as powerful as the selling is, there's much more of a penchant to overshoot targets. So you'll see how I have to kind of parse levels when it comes to support and resistance today. But all in all, it's possible that coming into Friday, we could be in line for a very powerful dead cat bounce. I wouldn't be surprised. That's why I say I see the starts of it trying to happen today, but I see that there's so much selling left in the system that it's going to be hard for it to kick over and get going today. So that's another thing that I want to warn you of. Let's get to the levels. Give me just a moment. All right, as we see the levels of support and resistance today, it's kind of jumbled because I said we would have to do the levels a little differently today because of the penchant to overshoot. So, coming in, resistance. First level of resistance we're going to have between 454 and 455. And think of this as kind of Jack, Queen, King. So each level is more powerful than the next. This is the Jack level of resistance. This is the Queen level of resistance. And this is the King level of resistance for today. So again, first level 454, 455. Second level of resistance 456, 457, and the King level of resistance is going to be the 462 area. And when it comes to support, the first level of support is going to be 449, 448. Second level is going to be 445, 444. Third level is going to be 442. Another reason why I have to do it like this is things will move extremely fast. As you can see how these wicks are, when you get movement like this, it's almost impossible to see the indicator and internals catch up in real time. So it gives it a larger area where this reaction can take place. So that's why I have to expand the support and resistance areas, because it's going to be so difficult. It's difficult to parse levels in conditions like this in general. But to see the reaction and to try to see divergence and convergence in those small areas, it is almost impossible. So this is how I have to look at things myself when I see. So there's going to be large areas of slippage where you're looking at, you should have got in at a certain area, but it's going to be impossible for you to actually get any kind of confirmation as fast as the market could possibly move when we hit certain levels. And if you do, you're taking a big chance with no confirmation. So you have to weigh that up in your account how you want to do it or handle it. So usually if I enter a move, there's some type of criteria and trigger that I must see in order to confirm getting in or entering a position. And it's going to be very hard to see on some of these candles moving as fast as they're going to move. I don't really see, we may not get a lot of that today, but in the next week or so, you'll definitely understand once you see how fast things can reverse and go 20, 30 points one way and then turn around and go 20 points the other way. I'm going to move through the scenarios for the day pretty quick. Give me a moment to get the first one up. All right. The first scenario for today is going to be a range day type structure. There are so many variations on a range day. So as long as you get the principle is we establish a high and establish a low and usually bounce between that. But There's a variation where we could have a range day with a bullish bias or a bearish bias. So it's too hard to tell, but I just want you to be prepared for what could happen. So in a possible range day structure today, we could establish a high, or the first high around 454, 455, and then roll over, hit support around 449, 448, try to chop back up, and then possibly fail again and hit an even lower low today. So that's the range day structure. It could pretty much go either way, but the main principle is that we establish a high and establish a low and basically chop between. So that's what you need to be prepared for. I'm going to ignore the probability on this because today things are so close and it's so hard to tell that the probabilities don't even matter to me. So you need to be that much more prepared for every situation to happen today, because the probabilities, where we close, the expansiveness of the range is too much to really narrow down a probability on what scenario is likely to happen. So we have to be prepared for everything. All right, the next scenario is basically a change day to the downside. So pre-market, we rise up, and wherever we hit a reversal somewhere around here and basically head back down. And we have not only two support levels that we're aiming at 449/448, but also it's possible to move even lower to the 445, 444 area. Not only those two levels, what's important about the change day is that the expected move for the week, the lower end of that move is at 446. And if we get to 446, it could act, if we get anywhere near 446, it could act like a magnet and kind of draw us into that 446 area. And we could just kind of chop around that 446 area for a long time. And it's going to take a big, powerful move to get us off of that 446 either way. So if we make it down to this 446 area, look at your volume. Once we're on that 446, it's going to take an above average volume spike to get us to move one way or other off of that 446. So be very careful, because this could wind up playing not just today, but a big part of tomorrow, where we chop around, and at some point, if we move out to the downside, it could get really ugly and we could get going a long way. So you have to be careful about this 446 area. So that's scenario number 2. Again, I've given the key areas or key reaction areas of support and resistance, and you just have to watch and plug those in, and that's what you're looking for. The last scenario for today is another change day. there's so much selling. There's so much selling in the order flow that it can't escape me. We're going to deal with it one way or another. At least that's how I see it in my mind. We have to deal with it one way or another. So we could get a change day where we come in off the opening and shoot up towards resistance, and that resistance could be any of the key resistance levels that I listed before, the 454, 455 area, the 456, 457 area, or even above 462. But there's so much selling on the book that unless we get above 462, 463, we're going to get sucked back down toward the expected move at 446. I just don't see us escaping that so easy. So that's why I see a change day to the upside being the other scenario today. So these are the things to prepare for. Be very, very careful. 446 holds a lot of weight. It's like Pookie. It's calling us. So be careful, because once we get sucked down to that 446, a volume spike taking us below, we could see another decent drop. So just warning to be very careful and watch out. Please use defined risk trades. Usually today, especially if you're taking trades that you're holding overnight, it's best to use some type of vertical where you limit your risk or limit your losses. And if you're going to be doing that to the bear side, you can use what's called a bear put vertical. That's where you buy the higher strike, sell the lower strike, which is your target or where you think the market is going. And that produces a debit. And that debit is your defined risk loss. And the opposite is true on the bull side. Buying a call or what's called a bull call spread. So we want to make sure that everything we do is defined risk. So as always, know your risk. Wishing you a successful day of trading. Have a great one.